Right, everyone. Yeah, just back to this question then, the 2025 leads to a question, right? Question one, the sole trader, and it's to do with the Vans adjustment, right? So it's in part three that we were working on in class, right, with the Vans, and it's the same adjustment that always comes up. The only things that might change is of course, the dates and the amounts. But everything else is pretty much standard. So it's saying to us at the start of the question, provide for depreciation delivery vans at an annual rate of 15% of cost from the date of purchase to date of sale. Now, that's perfect because from the really all we're doing with depreciation then is just depreciating the van from the moment they have it to the moment they sell it. Okay, so that's nice and easy. Note on the 30th of June 2024, delivery van, which had cost 35,000 on the 31st of August 2022, was trading against the new van. So the 35 is the disposal, and the new van 48 is your addition. All right. Allowance of 23,200 was given for the old van. So that's the value, the real value of the van. All right, of the old van disposal. The check for the net amount of this transaction was entered into the bank account, but was incorrectly treated as a purchase of trading stock. Now that's typical of the adjustment that you'll have here, and that's the first thing that we need to do with the vans is remove that from purchases. Okay, so that's the first thing. So we're going to kind of just do this in steps. All right. So step one, okay, is I'm going to remove the check amount or the bank transfer of this van. All right. So the new van cost, right? So new van, right? Cost. I think it was 48,000. Okay. Less the allowance. So less allowance. All right. The trading allowance is actually the figure that we need. 23,200. All right. Just take those two figures away from each other and you get 24,800. Okay. Now that's your check amount or net amount of the bank transfer. All right. So this is the amount that needs to be taken out of purchases. Okay. So what you need to do next then is drop the purchase account. Okay. Some purchases. And I'm going to drop the vans in as well. Okay. Now, uh, all I need really are the opening balances, and I'm getting them straight off the trial balance. All right. So trial balance, 622,400 is for the purchases. Okay. And the vans, the figure for the trial balance is 132,000. Okay. Again, just getting these amounts from the trial balance. All right. You can label these then as well. Okay. So your purchases is an expense account. Okay. So I'm putting a plus sign over the debit side. So anything on the debit side will increase it. And I'm putting a minus sign over the credit side. So anything on the credit side will decrease this. All right. And your vans then is an asset. Okay. So anything here, any additions will go on the debit side because it will increase the asset. And anything on the credit side then, right, will reduce it. That's why we have the minus sign there. Okay. So this figure here, this 24,800, right? This is what was put in incorrectly into purchases. So it's in here. All right. So what we need to do then is reduce this. So I'm going to new van, just right. Okay. 24,800, right? So I'm just literally just taking that figure and I'm removing it from purchases because this was the new van. It was incorrectly posted to purchases in the first place. And what you do then, you credit your purchases and you debit your vans. All right. So I'll just write purchases. Okay. And there's your first whole step then, right? There's your step one. All right. And it's always going to be the same. All right. Nothing is ever going to really change there. Okay, you can leave the vans account as is and the purchases, right? You usually what I do is a 3 or 4 lines, 5 lines, maybe each of these because you only need the one purchase account and the one vans account because we're going to do a couple of little adjustments here. All right, so there's your step one. Step two, then. All right, what you need to do next All right. So I'm just going to write step 2. Right. What you need to find is the profit and loss on the disposal of the old van. So find profit or loss on disposal of old van. Okay. Yeah, you'll have this for any disposal of an asset you'll have, right? You'll have to find a profit and loss on it. Okay. But again, it's if we just do it the same way all the time, right? So I'm just going to do a little work in here. Okay. So you get the old van cost, right? The tell us in the question is 33,000 or 35,000. All right. I need to take off the depreciation, right? We don't have that yet. Okay, so I'm going to put a little W here for working. Right. And what I'm trying to find is a net book value. All right, that's what I'm trying to find here. So, little work at the side here then, right? Depreciation on old van. Now, that's why I was saying earlier, I kind of like it the way they kind of described in the question here. You know, the van is depreciated, or vans are depreciated from the date of purchase to the date of sale, right? That makes it nice and easy. So all you really need to do, or what I always really do, is I write down the dates, right? So it was purchased on 31st of August, 2022, and it was sold then on the 30th of June, 2024, right? The year we're doing. Now, all you really need to do then, right, is I'm going to write years, okay, and months. And I'm just getting the year. So you see the way it's 2022 to 2024, right? So I'm going to do 2022, 2023, and 2024, right? And all I'm doing is I'm finding out how many months they had it for each of those years, right? How many months they had that old van for. So if you look at 2022, they bought it in August, right? So that means they had it for September, October, November, December. They had it for 4 months of 2022. They had it for all of 2023. Right, that's nice and simple. So 12 months. And they had it then, if this was, they sold it at 30th of June, so that's 6 months, right? So they had it for 6 months of 2024. All that, if I just add all that together there, I get 22, right? So therefore, what you can do is the 35,000 cost multiplied by the depreciation rate of 15%, multiplied by 22 over 12, and that will give you a figure of 9,625. Now this is the depreciation figure I need, right? So that's how much they depreciated this old van, right? I haven't for 22 months. So minus 9,625, right? So you take away the cost and the net, the cost and the depreciation away from each other to get a net book value. So net book value is 25,375. All right. Now, what you do is, this is what this old trader thinks this van is worth. All right. But they got a trade-in allowance, and the trade-in allowance is actually more or less the truer value of the van, right? And they're saying it's 23,200, right? That's the trading allowance, right? So what you do is you have to take these two figures away from each other, net book value and allowance, and you get a figure of 2,175, right? Now, what are you staring at? Well, if they think it's worth this 25,375, but the trading allowance is only 23,200, this is a truer value. Right, so what's kind of really happened here is maybe the sole traders under depreciated the van, but this is a loss on disposal, right? So that's a loss on disposal. Okay, yeah, because it's actually worth this, but they thought it was worth this, right? But this is what they got for it, 23,200. This is what they got. All right, so this is the truer value, and that's why it's a loss on disposal. Okay, so there's your whole step 2, and again, that's never going to change. All right, what you can do then next, or you have your disposal done, right? Or sorry, when you have your profit and loss on disposal done, right? Your step 3 then, right? Step 3. What you can do is adjust the accounts. Now, the accounts that you're really adjusting, right, is the vans anyway, right, because we don't have all the addition in and the disposal in. We're going to have to drop a disposal account, right? So I'm just going to draw a disposal. And the other one I'm going to have to adjust is the vans accumulated depreciation. All right, so that's what you need to do first, is drop those two accounts. All right, we don't have any opening balances here, right? The only thing you need to remember with the disposal account is anything on the debit side is going to be a profit, right? And anything on the credit side is going to be a loss. Just remember, like, what I usually do is I draw a little profit and loss account, right? Kind of close to it or beside the disposal account, right? Your profit and loss account is just an income account, really, okay? So profit on the credit side, expenses on the debit side, right? So anything that goes here or here goes on the opposite side of the P&L. All right. So what I'm going to do is I'm going to get my opening balance for the accumulated depreciation anyway. Okay. Now, they don't give you the accumulated depreciation figure in the trial balance. Sometimes do that, right? But it's easy enough to find it. All you need to do, the cost is 132,000. You look at your trial balance there, right? You have a cost figure, I think it's in brackets, 132,000 for the vans. And what you have then in the trial balance is 110,500. But that 110,000 is your net book value. All right. So all you have to do, it's a bit like what we were kind of doing here with disposal, right? All you're doing is taking the cost and the depreciation away from each other and get your net book value, right? But we're just working the opposite way here. So if we get the cost and net book value, you get the depreciation. So I'm just taking those two figures away from each other and I get a figure of 21,500. All right. So that's my opening balance for accumulated depreciation. What I usually do first is I do the disposal first, right? So what we need to do is remove the old van from the van account. All right. So what I'm going to do is the old van. Nope, we already have this worked out here. All right, the old van was 35,000. So I need to do is disposal. So go to my van account, disposal, right? And 35,000 is going on the credit side. So I'm reducing the van account by that disposal. Okay. What I do next is I debit my disposal account down with the same amount. All right, 35. Okay. So that's how you do a disposal of an asset. All right. Credit the asset account, which in this case is the vans, and debit your disposal account. Okay. What you do next is if you get rid of an asset, right, you also have to get rid of any depreciation associated with that asset. Okay. And we've worked out what that depreciation was. It was 9,625. Okay. So again, we go back to the accumulated depreciation for the vans, right? This is a liability, right? So I'm reducing this account. Okay. So I'm just going to write disposal on the debit side of the accumulated depreciation, right? 9,625. Okay. And what you do is you credit your disposal account, right? So vans depreciation. Okay. 9,625. So you've got rid of the asset and you've got rid of the depreciation associated with the asset. Okay. So there's your disposal account. That's the old van disposal done. All right. There's one little thing that we haven't taken into account up here. You might have spotted it already. All right. This allowance. Okay, we haven't done this yet. So the trading allowance, the 23,200 has to be accounted for, right? Because we won't have, if we don't put that allowance in, we won't have the whole new addition, the new van. So I'm just going to debit the van account, right? 23,200. So now what you have there, if you add those two figures together, now you have your addition, right? Now you have the 48,000 sitting there for the new van. All right. So you have to debit your van account, the 23,200, and what you do is you credit your disposal account. right? So allowance 23,200. Okay. You have everything there in the disposal account now. All right. So hopefully, if it's all working out, we should come to this, right? Our working should match our double entry. So what you do is, I'm going to total up this. I'm going to close off this account. All right. Obviously the debit side's bigger, so 35, right? 35 will go there, and 35,000 will go here. All right. Now what we should be left with then, all right, is the loss. Now, how do I know it's 2,175? But how do I know that's a loss? Well, see, that's why if you drop this little P&L account here, right, the other side of this is going to the P&L. But remember we said before, anything here is an expense and anything here is income. Sure, the loss is going to be an expense then, isn't it? All right. So that's how you know your double entry and your workings are correct then. Because you should be coming to the same figure and you should be coming to the same conclusion that this is a loss on disposal. All right. So there's your disposal account done. All right. What you can do next then is then tidy up the van account for yourself. All right. Because you got everything in there now. All right. So I'm just going to close this off. The vans. If I think this all goes to 180, right? 180,000. So my balance right down is 145. All right. So balance right down 145,000. All right. Now that's your balance sheet figure then. Okay. So that will eventually go to our fixed assets in the balance sheet. So now your van account is done. All right. So your disposal account's done, van account's done. One last little step then, right? And we'll call this maybe step 4. Okay. You're going to need it anyway. We're going to need a depreciation for the vans for the year. All right. But again, it keep the working the same way. Do it the same way all the time. All right. So what I'm doing here is work out depreciation for vans for 2024, the year we're doing, right? Okay. So I'm just going to do it like this. The new van. All right. So the new van cost, right? This is the addition, right? It was 48,000. Okay. By 15%. I'm just getting that from the question, right? They're telling us to depreciate 15%. They bought the new van, if you see it in the question, the 30th of June. Okay. So how many months it had it for? July, August, September, October, November, December. So 6 months. All right. So 6 over 12. All right. That'll give me 3,600. Okay. The old van. So they did have the old van for part of 2024. Right. And again, because all this kicked off on the 30th of June, they had it for 6 months as well. So 35,000 by 15% by 6 over 12 will give you 2,625. Okay. The remaining then, right? Remaining vans. So what you really have then with the remaining vans is 132,000 what they had at the start, minus that disposal. Okay, 35. See, they had everything else then for the year, right? If you just get the cost minus that disposal, because we've already depreciated it, all right? Same to the new van. If I multiply that by 15%, okay, you get 14,550. All right. Now, all I need to do is add up the 3 of these figures. All right. I get 20,775. All right. Now, that will eventually go to our profit and loss. All right. Probably selling and distribution expenses actually in the profit and loss account. Okay. So what you do is you go to your accumulated depreciation account. Right. I'm just going to write P&L. You're increasing this account now, right? Because this is a depreciation charge for vans. So this will be an increase in your accumulated depreciation. Right. So it'll be 20,775. Now, you're in a position now to close off this account as well. Okay. I think that total is 42,275. so balance carry down. It's 32,650. So balance right down 32,650. All right, and again, that will be going to our balance sheet as well, fixed asset balance sheet. All right, so that's it. Really, that there's your whole van adjustment. But taking in steps like that. All right, I know there's a good bit of work and learning in it, but the only thing is you're doing an awful lot of revision and practice with your double entry, and yeah, there's no real great shortcut with it really. This adjustment is always going to come up, right? It's guaranteed to come up, but if you just practice it a couple of times, you'd be fine. All right, and just always do it the same way. All right, there you go.